Welcome back to the Dividend Diplomats YouTube channel, guys. You've got Bert, the Hurt, and Lanny, the DD, the best dividend investors out there in all of media, guys. And we're talking about a certain popular stock that just suspended guidance. And the stock at the time of this video is down, over 4% in the after hours market. Are you buying?
Let's find out. But before we do, smash that subscribe button, everybody. Give your boys a thumbs up. We are so close to 20,000 subscribers. It's taken a while. It's been a long, long journey, but we are almost there. So thank you, everybody, for that love and support. But let's help get us bumped up over that 20K mark.
Yeah, so close. You're right, Bert. Man, we're like barely over 100 subs left. Let's get there. We're going to give out a bunch of swag once we get there, guys. So can't wait to celebrate with
Ooh.
everybody out there on YouTube. But we're not going to beat around the bush, guys. Q3 or fiscal year earnings are also coming in for those that end their year in September. And a certain 110 billion by market cap company, a certain coffee company had just released earnings here at the end of October 22nd, which is tonight. We're recording this here at 10 o'clock. Starbucks stock, Bert. Starbucks released their earnings, and it was not a good one for Starbucks. Starbucks stock right now in the after hours market is down by 4%. And it makes you think, are we at the cream of the top here? Do we need to take a little off, or is it time to buy a little bit more?
Ooh, I love that question because when the stock drops, that could present buying opportunities to grab a potentially undervalued dividend stock. So what we'll do is we'll talk through a little bit more of the quarter. We'll dive into a little bit more detail there, and then we'll run them through our stock screener to answer that very question. We'll look at that price to earnings ratio, that dividend payout ratio, that history of increasing dividends, and that dividend yield. But first, let's jump into the earnings. Let's talk a little bit about what's happened to the company. Overall, there was a sales decline. Q4 sales were down 7%. Earnings weren't much better here, Lanny, were they?
No, I mean, with the sales decline, they missed, they were hurting bad on the top, hurting bad on the bottom. GAAP EPS came in only at 80 cents for the quarter, down 25% versus last year. Pretty much the same metric, even on a non-GAAP basis. The big thing is, and I think they released something a few weeks ago from Brian Nickel, the new president and CEO who came from Chipotle, AKA turn that company around, and now he's there to turn this brand around as well for Starbucks. But a few weeks ago, they mentioned all of your app rewards and your in-app promotions and your real and dealing type of offers that Starbucks was doing. Essentially, they're saying that all of those promotional and marketing gimmicks did not really do anything to the consumer base and the frequency of visiting or spending at their stores. So it essentially, they went up to the plate, they swung three times, and they missed every single pitch. And essentially, they are now planning on scrapping, if not, they've already scrapped doing all of that. And they're trying to just get back to basics, which I always love when a company gets back to basics. Bert, you probably remember some of those articles we used to write about getting back to basics.
Oh, yes, I did. And I think that's an interesting observation, especially an experiment of what happened with Starbucks. Because we talked about this before the video. I have the app. I don't drink a lot of Starbucks. I drink a lot of coffee, but it's never Starbucks. I usually make it for myself at home. You'd see the promotions. There was this 1 month period where I was just getting pinged with notifications. Buy one, get one this day, $2 off this day. You saw them experimenting with the promotions. Personally, it never once drew me to the store. And I guess what I would think about it is, and we've talked about this in the years leading up, right? If you buy Starbucks, you're going to buy Starbucks. The lines were always packed. The lines were wrapped around the store, whether there were promotions or not. It looks like Starbucks just learned that the hard way over the last quarter. You don't need the promotion to bring people into Starbucks.
Right. And I remember, I think I wrote an article probably close to almost 10 years ago as well, where it's like Starbucks just brings people together. It's just having a nice seat at the table and bringing family, friends to share memories and talk and really catch up. Because I I
Yeah.
think back in the early, mid 2010s, I used to frequent Starbucks quite a bit. My wife is a huge Starbucks lover.
But
You
that's
own a
not
lot of
the
Starbucks stock.
yeah, but that was the pre-COVID experience. I think what we've learned now is what people probably care more about, less about the rewards, less about the
Is the
in-store
Dividend
experience.
Diplomat sweatshirt.
It is a dividend diplomat sweatshirts, but it's just getting your stuff quickly, being able to put your order in ahead of time, making sure it's going to be good, it's going to have a high quality, it's going to be fresh, and just let them come in and get out at their leisure. And I think that's probably where they're going to go lean more into and why they brought in the Chipotle CEO to help turn that around.
Exactly. We've been talking about it a ton, probably all year, that they need to simplify and get those efficient orders done. We even suggested doing like a separate line for the basic orders or go like Chick-fil-A style with ordering from a iPad,
Mhm.
in line and just speeding through, just because, that's halting, the number of sales that they can get. So for the full year, they also had sales that were down 2%, consolidated net revenues that were up 1%. GAAP EPS came in at 331, down 8% versus prior year. The interesting thing is because of all of this going on, because Brian is now there, they actually said, okay, we're going to suspend 2025 guidance until we come out with our new strategy, which is really just getting back to being Starbucks coffee company. So they're really getting back to the pure basics of being a nice premier coffee shop.
Yeah.
Now,
There's oh,
yeah, go ahead,
I
go
think
ahead,
we're
go
going to
ahead.
say the same thing because I think there was something interesting that also came out. So you get
Yeah.
worried when you see lower sales, lower earnings, and then the company suspends the guidance. But there was an interesting announcement that at least lets you bring confidence in there that when they do announce the guidance, it's not going to suck. And it's kind of the same logic we talked about with Archer Daniel Midlands earlier in the year. There was a lot going on, but they still did one thing to help instill confidence in us dividend investors.
Oh, Bert, they still do one thing. And that one thing is raising that dividend. They raised it 7% today, despite all of that. Did not anticipate an increase of that nature at all from Starbucks at this time right now, but they did. And the confidence is probably what's keeping the stock from dropping more than just the 4% in the after hours right now.
Yeah, if you think about it, sure, they're not going to have guidance, but they know enough about where their guidance is going to go to be able to feel confident enough that they can increase that dividend to shareholders. So their projections are showing them that they're going to be able to increase the dividend. They might not know what the final earnings per share is going to be, what the final revenue is going to grow to, but they at least know it's going to be enough to pay a 7% larger dividend comfortably.
So what we'll do now is based on that EPS that they just had, the 331, and with the after hours market, we are going to dive in to the Dividend Diplomat stock screener, aren't we, Bert? We're going to check them out. We're going to run through the metrics now, and we're going to see if this is a stock to buy post earnings release. So, Bert, stock is down to 90 to 80 in the aftermarket. We will show it up here on the screen. EPS 331, PE of 28. Ooh.
All right. So let's even assume that earnings guidance comes out and it's down to three, it's down 10%, increases the price to earnings ratio to 30. So guide, even with this last earnings, even with a potentially lower one, it is still higher than the S&P 500. So you can absolutely not say that Starbucks is a cheap stock right now, looking at that price to earnings ratio.
No, no, you really can't. Unfortunately, you just can't. And Bert, they did just raise that dividend, so now they pay 61 per share per quarter. What's that payout ratio now look like? Now that the dividend has now swelled up, right?
Well, it's swelled up to the point where it's eclipsed our 60% dividend payout threshold. It's
Oof.
at 73.72%. So this one's going to be a really interesting guidance to watch going forward. They did just increase that dividend. So short term, they're not concerned about it, right? But if earnings can't grow, if earnings lag or earnings even decrease, you might have to keep an eye on that payout, that dividend in the long run.
You know, and that's why we were all very surprised because based on earlier reviews and releases of this, I think they were already in that mid to upper 60s on the payout ratio front. So seeing that they increased the dividend definitely was a surprise to us because Bert, hey, but they wanted to keep that streak alive too, maybe. They had that 13 years of growing dividends at almost an average rate of 10% over the last 5 years.
Yeah, and it is interesting. It was below their average, and we had been talking all year about how we were expecting low single digit dividend growth for Starbucks. So it beat our expectations for what we'd been talking about
Hands
out of the
down,
water.
candidly.
So I would definitely wasn't expecting 7%. That's a pleasant surprise, but we'll see.
Yeah.
We'll see. It's a nice little treat. Nice cherry on top.
Nice little treat. Nice little early Christmas present here or
It's like when
Halloween.
they put the little cinnamon on top of they do the nice little like the little thing for the holidays. I don't know. I'm out of it right now. So let's keep going to the dividend yield. What's that dividend yield looking like, Lanny?
So, now that they've increased the dividend again, and if share price also comes down, so you've got like both kind of working in favor of a better dividend yield, if that makes sense. Usually you don't get both working in tandem, a higher dividend with a lower share price, but the dividend yield is reasonable. It's 2.63% over that 5-year average of 2.05%. So you're still getting that premium to the historical yield of about 58 basis points.
Yeah, so we'll put the metrics up here with the PE ratio of Lanny 28, 73% payout ratio, and that recent 7% dividend increase. Lanny, what is your overall gut reaction to Starbucks? Is this a stock to buy right now? What are you feeling?
Yeah, so guys, all you investors out there, how do you feel about Starbucks? Let us know before I respond. 3, 2, okay, you guys responded great. I think it's way overvalued right now. I think trading in the 90s is a little wild for me. It would have to get down into the low 70s again, where they were, a handful of months ago when we were buying the stock. And I think that's where the stock needs to be right now, is in that 70 to 75 range for me to be a buyer.
I agree. I agree with every point. I don't really have anything more to add. So everyone, let us know, what do you think of Starbucks? Do you like them at this price? Do you like them after they've gotten crushed after hours? Do you like them in the 70s like we do? Let us know in that comment section below.
Guys, man, it's all about getting to financial freedom, keeping your money ready for opportunities, guys. Keep investing, keep building passive income. Subscribe, like the video. And Bert, I got one thing to say is you're either with us or you're against us, Jack. That was Bert and Lanny from the DD. Over and out.